Today's June 20th, 2023. Missed a couple of weeks, the last couple of weeks, so we're catching up. LasagnaCat's gonna give us his progress on how he's been progressing through his finding his way. One of the things that I did notice um the last couple of weeks is LasagnaCat's confidence level. It's gone through the roof. I can talk to him, ask him questions about price action or a certain play, what's currently going on the screen, and he can spit out, without any hesitation, what he's thinking, what he's looking for, and what he's kind of predicting or anticipating price action might do. Um, so I've seen the improvement. I've liked seeing them grow. And one of the big questions that I've had that is for Lasagna Cat is, what changed from the beginning till now? And I think a lot of it has to do with mindset. A lot of the mindset things, a lot of traders take for granted or don't put that much weight on the mindset. When the trading mindset is completely different than a regular person's mindset. It's kind of the inverse. You know what I'm saying? It's like um you buy tops. I mean, you sell tops and you buy bottoms. You don't want to trade anywhere in between because that's not your setup. Um, but that being said, hey, Lasagna Cat, can you answer the question as to what has changed in the last couple of weeks? I know
Uh,
may have a little bit to do with it, because we've talked about that a couple times. Uh,
yeah, mindset is a huge thing, and like from where I'm coming from right now, it's kind of broken down into two different areas. Like number one, first area is that you need to be versed in trading psychology, and like Semper was saying, the way it's sort of the inverse of how like regular people think. You know, regular people see something like as a risk, or like it's an acceptance of risk type of thing, and being comfortable with risk and uncertainty, whereas regular people, they have a hard time accepting risk, and they have a hard time living in uncertainty. It's the uncertainty thing, really. It's like it's the acceptance of uncertainty. It's not like you want uncertainty, but you accept it. So read Trading in the Zone, Mark Douglas, great book. Talk with other traders. Always listen to Brandon when he's talking about mindset and stuff like that. And the second part about mindset, which is the thing that's really, really helped me the last few weeks, is and having a specific setup and specific rules is really what gives birth to this, is talking yourself through the price action of the day and talking yourself through your rules as you see price action develop, and then having this conversation with yourself. What do I want to see, and what do I see now? What do I see now? What do I want to see? And you do it in accordance with your rules. And I'll start breaking down these slides to give you the sort of like a really good what you call it, representation of what I'm talking about. So let's see here. Let me pull down this slide here because this shows the whole day of the one I'm talking about. So it's my first trade from Monday. And I'll just walk myself through this trade and show you how it built the confidence. Because when you have a conversation with yourself about what's happening in the market, and a conversation with yourself about, are my rules being represented, then you have no room in your mind, in your mental state, for thoughts about FOMO, thoughts about losing money, thoughts about losing opportunity. Like there's no room for that in your mind because you are walking yourself through a factual, rule-based conversation. So that's all you're thinking about. It's all you're focusing on. So during this day, I started thinking about during pre-market. I was like looking at moving averages, and I noticed that I use moving averages a lot. Semper really emphasizes them and has taught me a lot about them. So I saw that a lot of these moving averages, like the 100, 50, 200 EMA, were pointing down. and there was a 50-50 cross to the downside. So I was thinking that what we'll see initially is a downward move. And I saw that the 200 SMA was crossed above the 666 SMA. Now, I know for a fact that I like to see my moving averages with the 666 crossed above the 200. So at this point, already I was like, damn, I need to wait a while until the 200 is crossed under the 666. And I know that it's going to be a while. So as that's happening, I can talk myself through the rest of price action indicators until we get that point. And that this cross would need to coincide with major support. Um, I don't have my SPY chart up. This is my MES chart, so I can't remember SPY's support from that day, but it was definitely there. And so what you do is I was like, okay, moving averages are pointing down. So at the open, like I just don't care because I don't have my moving average stack. With what Semper has been emphasizing and has taught me a lot about is for my setup, the one I like, a dump to higher lows, and then like a fib entry and get in. It's very important that the moving averages are stacked a certain way. And before I see that, before I see the proper crosses, I just have no business getting in the trade. So as this is happening, I'm seeing this huge spike up. But this isn't FOMO for me because it's not my setup. It's just whatever. It's just things doing what it's going to do. Pull back, no big deal. Another one of my big rules is I only trade price action that I find to be recognizable and replicable. So I'm saying to myself, do I recognize this price action? Am I likely to see it again? Is it price action that if I see it again, I'm going to want to play it? That answer to all those questions for me is no, because I don't recognize this. It's just a bunch of spiky, squeezy, nobody's business. Now, this could be someone else's setup. I personally don't know how, but for me and the setup that I outlined that I like to do, this has nothing to do with it. So I was like, cool, I don't recognize this shit. I'm gonna just keep watching. People say wait and see. I don't say wait and see. I say be patient and watch like a hawk. That's a little bit more accurate as to what we're doing. Wait and see is a little too that's neither here nor there. That sounds a little flaky. So here I am being patient, watching like a hawk, and like so I'm seeing the moving average crosses 200, 200 aren't where they need to be. I'm watching the 50 SMA. I'm watching a lot of stuff, but I'm asking myself, another thing I like is for RSI to have higher lows. I'm like, do I see that? No. Like, am I seeing green volume? No, I'm seeing red volume. Um, and other stuff like that. So here we go. I still don't recognize price action. It's one of the main things from this day. And I still don't have my 200 under 666 cross. That's the thing I'm looking for the most. But at this point, they are starting to close in on each other. So I feel a cross is coming in the proper moving average stack. So I'm like, okay, as that's happening, I'm like, well, what else do I see? The 50-50 is still crossed to the downside. Also, by the way, if you need any explanation on the indicators I'm talking about or moving averages, just like, drop me a line, send me a message and you can refer to the video if you want, or just ask me a question straight up what I mean by any of this. Unless you want to ask a question now, feel free to bust on in. So when price action came down to this support again, I was like, all right, we've got a, what you call it? What's that? A double bottom at support. And which seems significant to me. So I was like, well, let's watch RSI for some higher lows. I usually like overcool RSI, but I also look at what do you call it? Higher lows in RSI and pullbacks to the 50. I watch that. So moving on, I thought that this, my bad. I thought that this move up here looked interesting because it was the second tap of support and it was a nice move up. It didn't quite hit the moving average, but it smashed through this 50 SMA. Didn't quite hit the 200 EMA. But I thought, all right, it's a nice decisive move, smashed through one of my major moving averages. And my moving average stack is almost where I want it to be, which is 666, 200, 150. And though they hadn't crossed yet, I was like, everything else is in line. So we're still waiting on that cross. So I'm like, what do I want to see? I like this. I like this higher low. I'd like to see, well, I like my fib that I drew, but I want to see a higher low. And I'd like to see a second higher low for entry. My entry is actually a little bit premature, and I'll talk about that in just a moment. Because I like practicing what I preach, but I still have a little bit of ways to go on that, of course. So we're in this situation. So I was like, all right, we got a nice fib drawn out. We've got a good pullback to my ad zone. Awesome. Ad zone is the name for where you enter on a fib. draw the fib in the from 38 to 61%. There's two ad zones in there, whichever one you prefer. And so I was waiting for a second higher low and my 200 under 666 cross. So here's where I was a little bit hasty. I'm still oh, we got a question from Whiplash. So Whiplash asks, for your setup, you want to see the moving averages in the following order, low to high. Low to high, 50, 100, 200, 666. Yes, Whiplash, that is absolutely correct. For that sort of reversal after dump move, definitely want to see that stack. All right, cool, bullish reversal. What did you use to draw those fibs? Chico M. All right, so let's see here. Hope I'm pronouncing your name right. So the fib that I used was this top, this green top. I usually use a red pullback. And again, although I'm starting to recognize price action a little bit or getting ready to, this isn't a very clean chart. But what I liked about it was that it was a much more clean move up. Whereas this one back here was squeezy with a split. This stuff was noise, but when I saw the double bottom to a cleaner move, still kind of weird. And I saw this top, I thought, okay, we've got interaction with a couple moving averages. Not that one, unfortunately, but I like the cleanness of it. So I drew my fib. This was the top. This was the 100. I usually like a red pullback again, but this day was a little bit weird. So I drew that to the bottom of that move. And I also saw kind of higher lows here. So I was like, all right, we'll see what's up. So yeah, that was the fib from there down to there. So my ad zone would be right around here. But I wanted to wait for a more decisive higher low. But here's what happened, and here's where I was hasty. I finally got my cross right there, what I was waiting for all morning. And then I didn't wait for a proper pullback. You know what I mean? Like, and that's me breaking a rule. That's why I showed my entry and then my ideal entry over here. That's the improvement that I'm striving for. So, but I still felt okay about the entry because I like the higher low here. And so I did catch like either a little bit of FOMO or television, like not television, pardon me, tunnel vision, not television. I don't watch much television. Tunnel vision. One of the great things about talking yourself through the trade with your rules as the conversation is it also cuts back on tunnel vision a lot. And, and tunnel vision can really screw up your trading, as we all know. But I did have a little bit of tunnel vision here. So it screwed around a bit. It pulled back down. I really didn't like how far back down it went, but my stop out was here, a little underneath a candle close underneath the 23.8 fib. So I was like, all right, we're still good to go. And I saw how small this TTM wave was. Now, for me, TTM is a great indicator of when something can squeeze, when something or not squeeze, but also continue. So when I saw how small this one was, and that the previous one was like larger, and that this one was larger than this one, in terms of buyers, I was like, all right, this wave to me looked really puny. And with the red squeeze dots representing, I figured this puny seller meant that it was more likely to squeeze to the upside. At that point, that's where I drew my trend line to see if I got trend support. Now, in terms of how I could have done this trade better, I could have drawn my 100 fib here, waited for price action to get to that 200 SMA, and then drawn it down to the bottom of the move, and then make my entry here. You'll notice same price, but entering here shows that I'm conducting myself more in accordance with that rules-based conversation that you should have throughout the trading day. Know what your rules are and ask yourself questions. Are those rules present in the price action in me looking for my setup? So that's where I could have done better. And also moving averages look that much better at that point. As well as interaction with 50 RSI, whereas where I entered, it was a bit choppy. I saw this pull back to 50 RSI, so I thought, let me get in. That's kind of also why I got hasty. But so with that improvement in mind, the play still played out exactly how I wanted to in terms of targets. Once this cross 666 over 200 happened, it started spreading out real good. And then boom, 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 with a little bit of choppiness, whatever, you hang in there. At this point, I felt friggin' great. I was like, you can go up and down a little bit, whatever. Made my 161 first fib target, awesome. And my 200 fib target, also awesome. And I like to take him a little bit below, even though on this one I took it dead on, but it's a little bit below is, I think, better because sometimes it shies targets. And so that's the entire trade. And getting back to the question of mindset, it's that rules-based conversation with yourself. What am I seeing? What do I want to see? It leaves very little room in your mind for FOMO, very little room in your mind for tunnel vision. So it starts with great rules, which thanks to Semper and this series I've been able to establish for myself, use those rules to talk yourself through the day. And it really helps the mindset. That's the confidence.
Yeah, definitely. I've noticed, and I slowly just picked up on it, but I noticed that Brandon narrates a lot, and I picked up on that, and I was like, huh, if I walk myself through the trade, you're kind of preparing your brain to not FOMO.
Yeah.
Um,
Yeah. And also like it really helps the mindset. It changes the game with the mindset, but it also shows you exactly where your trade is. So that when you enter that trade, you're like, cool. I just like sit back and I see because, well, not see, be patient, watch like a hawk. But you know what I mean? You're like, okay, everything's set up. Boom, push the button. That was easy. And we'll let it play out and we'll watch it and we'll manage.
yeah, it's like Mark Douglas says in the book, you have to learn to accept the trade. Just accept the trade. When you enter the trade, you don't want to be praying or hoping that it goes in your direction, and you don't want to get nervous or start sweaty palms if it's going against you and then you get shook out. You want to be in the mindset when you're taking a trade, like LasagnaCat just said, push the button and stay cool, calm, and collected so you can actually make a smart decision. If you need to get out, you close your trade. Remember, keep your reds small and your greens, let them run. Try to let them run to your target. Um, and when you walk yourself through that trade, it just leaves no doubt in mind. You know what I'm saying? You enter the trade, and if it goes your way, great. If it doesn't, you need to learn how to close out your trade. Whether it's a mental stop, a hard open close below a certain level, whether it's a fib level. Back to Chico's question about the fib. We use the fib retracement on TOS. There's fib extension and there's fib retracement. We use fib retracement and we usually go from, if you want to go long, we usually wait for a higher low to be created and then we'll fib out either. I've switched it up a few times. There's a couple ways that you can fib, but like Brandon always says, it's not a matter of if the fib is going to hit. It's a matter of when that target's going to hit. Some fibs are a little bit stronger than others. Like a weekly fib is a lot stronger than the intraday fib, obviously. But the weekly fib is not going to give you intraday targets. It might give you like the end of the day target. Um, and that's where fibbing intraday can help. And usually, if we're going long, we wait for a higher low to be created, and then we fib out either the first red pullback, a red candle that has moving average interaction. That's Brandon style, is getting a red candle that has interaction with the moving average. In this example, LasagnaCat used this candle right here, this red one, to the fresh low. I started out fibbing out that way, but I've since changed it. If I'm using fibs, I'll wait for the price action to base, and then I'll wait for either a higher low to be formed. And instead of getting the red pullback, I'll get the tallest. Even I'll include the wick as well. So I'll get the wick to the bottom. And both LasagnaCat's fib and my fib will work out. His might hit a little bit earlier than mine. But if you look at this play, if I would have fibbed it out here, I probably would have hit both targets. It would have hit LasagnaCat's fib and it would have hit mine. So you just gotta practice and play around with the fibs, whether it's a fresh low to the new high or the first red pullback. There's also a way that you do it starting out the gate. Starting out the gate when market opens, you fib out the first leg, whether it's up or down, you fib it out. You fib out all the way to the first pullback. And then that gives you a potential entry or potential targets for that play. So hopefully that answers your question.
Yeah, and also, and she go, yeah, for the appropriate tool, like Semper said, it's Fibonacci retracements. And I don't know if you know where to find that tool on TOS if you use it, but it's just the percentage. It's the percentage symbol when you get that tool, like that
Toolbar.
toolbar. Yeah, toolbar. So yeah, check that out, and you plot a point, and then you pull it back to the bottom point, and then it just stretches these extensions, like for targets out. You just pull it back, and then these lines appear. Yeah, there you go. Yes, the percent. Yeah, correct. All right, yeah,
Yep.
cool.
Yeah, and if you want to go long, you go from the top to bottom. And if you want to go short, you go from bottom to top.
Yeah, exactly. Cyber is asking here, can you show an example on that part? You mentioned to fib out the first candle. I don't have access to my platform right now, so I can't see my different charts. Semper, is that something that you want to grab screen share for, or what do you think? There we go. All right, you're gonna get your example coming right up. Oh, Semper, are you muted?
Thank you. It doesn't work for this day just because the first leg was up, but the play ended up being short. But basically, you would fib out from the top to the bottom. And the first leg, obviously. You want the first leg. That when I first started out, that kind of helped me from jumping in right away. Because I had a habit of, oh, I think it's gonna go up, so I'm jumping in long and it would smoke me. So then Susan, another elite member, she came up with this fib theory where she would fib out the first leg and it would give her a play. Um, so that one didn't work. Let's see if there's another one that might have worked. This one looks like it might work. So here's the first leg down, right? And sometimes you want to do it when it's like real big candles, but this one it would then since it's down and the trend is down, it'll give you the target. So now I'm going to go from the bottom because this is the first pullback, right? Here's the two green candles. So I'm going to pull it from those candles. Come on. What the heck is going on? To the wick. And then look, your entry would be the 50, the 61. It depends. When I first started, I went from the 60 to the I used to enter at the 60 and then it went to the 50 and then it went to the 38. So anywhere between the 61 and the 38% is a good entry. That's called the buy zone. So you could have entered at the 60 on this one and then you stay in. Your first target is the 161. Your second target is usually the 261, but I'm more used to the 200, and the 200 is a custom level. So you have to go into your properties of the fib and add that level to it. Um, but as you can see, you did the first leg down, it's in the same direction, it pulls back, you enter here in this zone, and then you ride it to your target. Yeah, the Susan lesson, if you want to go back, just type in Susan. There should be two videos. Watch both of them, and then watch the third video after that that lesson where Brandon explains it a little bit more in depth, and it helps a lot. It helps a lot with stop. So usually your stop loss is the 23%, a hard open close below 23%. And then your buy zone is from 38 to 61. And that's whatever you're comfortable with. It could be the 61, it could be the 50, or it could be the 38, or anywhere in between. What did I use? TOS. I'm not sure I understand your question.
And when it comes to those fib videos, it's like, yeah, the second Susan video is like the first, that's the fib video that you watch. And then the one that Brandon did is the very next day. It's the very next video. And it's kind of a two-parter. Like between the two of them, what they explain, you get a really comprehensive understanding. So that's essential elite stuff right there.
Yep.
Okay, so I have some time left. I wanted to share, if possible,
Yeah, go for it.
let's see here, because I've got a red from the very next day. Um, and it's a good example of like what you call it. It's a good example of what happens when you don't follow your conversation with yourself. So like I mentioned, the two things that the rules-based conversation with yourself, um, what you call it. Oh yeah, Chico, you say where do I find those videos? After this meeting at some point, maybe I'll just link those two videos in the futures chat, and then you can see. Um, so yeah, this is an example of like me getting tunnel vision because I didn't follow that conversation. And my conversation was probably like that day was unfocused because I was either underslept or I hadn't eaten properly, like my breakfast, or my brain was foggy, had veered away from the morning routine that I counted on. Because it actually started like I know I was lazy about it. I was foggy about it. Because like I remember when I was watching this price action from the open, I started feeling FOMO about it because I said to myself, damn, I kind of saw that move coming because it began with a big dump, like a dump out the gate. And so for a continuation move up, I look for, it's kind of the opposite, uh, what you call it, moving average stack. It's like when there's a dump to a new low, I have it stacked from high to low. It's 66, 666, 200, 100, and 50. That's the stack I learned from Semper. But when I go for a continuation move long, when it's based on a pullback with no dump to a higher low, with no dump to a new low, I use the opposite stack, 666, 200, 100, 50. And so after the dump, I tricked myself into thinking just because that stack was there that I should have been able to call this move and like take it. Um, and I wasn't talking myself through it. When I saw this pullback, I was like, man, I'll bet you that pullback is going to go long, which sure enough it did. But still, that's none of my business because my setup is still not present. And since I wasn't talking myself through it, um, that is why my mindset got screwed up. So by the time I made this big move up here, I was kind of like, ah, shit, if I'd done that move, then I'd have like a great green recap for the day, great trade, great confidence builder, et cetera, et cetera, et cetera. So like, I was just sort of like, so I started getting salty and I started dwelling on that. No rules-based conversation at that point. I was getting a little fog, like a little bit of fog in my brain, losing my focus. And so when it came down here to this pocket and kind of got into my fib ad zone, because I drew a fib from up there, this chart kind of sucks because I forgot to like include the top and the very bottom. But I got in here when I saw like a little like itty bitty, like little like mole popping his head out of the ground, pull back to the 50, you know? So that was kind of lame. And I was focusing on that. Buyer TTM completely out of the picture. What you call it? Sellers coming in over here on the right, my MACD pulled back to confirm weakness and went down, you know? Oh, that was this one here, my bad. Pulled back to confirm weakness and went down. And 50 RSI plunged underneath. So it immediately worked against me I shouldn't say that. That language is too personal. It's too associated with personal betrayal. I'm not going to say worked against me. I think that's like a little too personal sounding. The trade didn't work out the way that I wanted it to. We'll put it that way. In fact, and with the setups I like to use, often if you misjudge them, there'll be a big dump candle that you get caught up in. So I kind of hung in there. I was like, ah, shit, like, where's it going to go? At that point, I was completely just on hope. And the rest of my recaps from this week are all good in terms of like the conversation. And in fact, after this one didn't work out, it kind of snapped me out of it. I was like, oh shit, what am I doing? I'm not talking to myself. I'm not having my rules-based conversation. So my next trade after this was fucking awesome. I might not have time to recap it. But just show you a quick little flash of it. This happened awesome. Got a great pullback entry, target one, target two, awesome. But that's just, I'm not showing that like to go over it too much. I'm showing that to you to show you that once I got back into the rules-based conversation, it was really good. So this also led to a much bigger stop out than I wanted because I was out of it, you know, my mind was out of it. Unfortunately, I got a nice mental reset after this. And I'm not recommending you take a red trade so that it will, because it will give you a mental reset, because that is not the case. You got to get your reset from other sources. But I'll tell you, after this happened, I did wake up and I realized that I wasn't doing my rules-based conversation, which is why I was not able to see that my opportunity was not here. And that's really key. And I like sharing that recap because it really illustrates what was different between that and the day before that. And I just want to show you again, this is where I screwed up. This is where I entered for the trade that didn't work out. Stopped out there. And I was like, okay, what do I want to see? In this kind of situation, I'd like to see it pull back to the 666. I'd like to see a higher low. I actually missed my initial entry because this was so fast, but I said, hey, look it, if it pulls back to this fib here, which is my 100 fib, it will most likely take off because the other indicators are starting to look great. But I'm only showing that to show you how my mental reset worked out. I am going to go back to the red to see if there are any comments because the red is really the point. Beep.
Something that has helped me avoid entries like this is try to get in on the pullback instead of on the run up.
Yep.
Meaning like, here's the pullback. So you should have gotten in on one of these candles. Usually what I try to pick is the low candle, right?
Yeah.
So which one out of these candles developed the low? This red candle right here.
Oh, I can't see your annotations, but there we go. All right. Yeah, cool. Yeah, this one, obviously. Yeah, for sure.
So
Came
it's
down
a
to
low,
the
right?
100.
Yeah. So it came back. So usually what I use is a two-legged pullback. And a two-legged pullback can be inside another leg, meaning like here's first pullback, second pullback, and then the third pullback. And it really pulled back.
Yeah.
But my entry on this play would have either been right here or right here on those two pullbacks.
Yep.
And then the stop loss would have been a break below, a tick below the fresh low candle. So that red candle, so a tick below that and a tick below here. So that's two-legged pullback, right? That's for that. But there's also a bigger leg. There's this one big leg, and then there's this pullback. So what created that candle? It's this red candle right here. So you want to try to enter a tick above it because you're gonna ride the momentum. That's what
Yeah.
you want to. It's like when you're surfing, right? When you're surfing and your instructor pushes you on top of the wave and then you kind of try to get on. That's kind of how this is. You want to get on the wave over here. You don't want to get in too early because it could still go against you this way.
Yeah.
So
But
Semper, you would have, to be clear, you would have gotten in on that green candle, and you would have gotten in when the green candle kind of got up to the size of that red candle previous to it.
Yep.
Is that what I'm hearing?
Yep.
Okay.
Yep. One tick above it. One tick above it right here.
Above the body of that candle, not the
Yeah.
wick.
Yeah.
Yeah.
Above the body.
All right.
That way you're going with momentum, you know what I'm saying? And you'll see this candle. It's a nice, good sized candle. And sometimes you have to look at how candles are developing to get out of a trade. So if I would have entered here, how many points is that? It's about 5 points to the top. Usually I'm comfortable with locking in 4 to 5 points, at least 50 to 75% of my position. See, like right here, it looks to me like you're catching a knife
Yep.
because you're going down with it.
Yeah.
But the reason why this is a short play is because it popped out, maxed out, right? Look at this big rejection wick. Big rejection wick at the top.
Yep.
And then it creates a higher low right here, even though it's just like a one candle pullback.
Yeah.
And this little green pullback. I've been caught because when I've been practicing this two-legged pullback, I've been caught like this. And this is the only reason why I'm telling you. I was like, oh, it's a pullback. But instead of entering short right here, right?
Mm-hmm.
Instead of entering short and stopping out right here, I enter long and then it goes against me.
Right.
Because I get tunnel vision. That's like, because I'm a long player, so I'm always looking for long plays. So I'm trying to look for ways to help me not be biased at all. Like be long and short at a drop of a dime.
Yeah.
And that's what I like about Brandon. Is like he'll say, okay, it's long. Here's my over under level. If it goes above this, I'm long. If it goes below it, I'm short.
Yeah.
And that's kind of what we have to kind of get in the habit of doing is okay, it's a lower, lower low or whatever. But this lower low is like the first sign of, okay, it might go down, right? And
Mm-hmm.
then this lower low right here, it it confirms the trend going down.
Yeah. Lower high.
Yeah, that lower high, yeah.
Yeah.
That lower high confirms it going down.
Yep.
The only way I would have entered here is if this setup right here was above over here, was creating a higher high.
Mm-hmm. Yeah.
Because price action tends to move in legs of two. And I think last week we measured it where you can measure your legs. Like you can measure this leg from here to here and say it's like 10 points, right? The second leg is going to be around 10 points. So then you measure it from here to here, and it should be the same size of
Yeah.
of this. And then sometimes there's a possible third leg. The third leg is usually 50% of the prior two legs. So even going down, if you measure from here to here, I don't know how much it would be, but you should be the same play from there to down here. It should be about the same size as these two.
Yeah. Absolutely. Hey folks, unfortunately, I need to jump off the meeting and go to my jobby job. So it's a short one today, but I'm glad that we got to go over the red because the red is always the most important one. I had some other winning recaps to share, but this Friday we'll be going over my recaps from this week, so that'll be all good. A question came in from Nick R. So
Yeah.
you haven't mentioned watching VIX TNX DXY. Are you incorporating those as well? Well, I listened for Brandon to sort of drop hints about that. I don't really watch them much myself. 10K Scoville's, thank you for taking the time to break that down. You're very welcome. Absolutely. My pleasure. Yeah, visit us on Friday if you got the chance. But yeah, I don't know, Semper, if you want to.
Yeah, I'll take over.
All right, fantastic. All right, well, thanks, guys.
See ya. Have a good one.
All right,
See you,
will
man.
do. Thanks.
We do, but some of us don't have the screen real estate to be able to put those other indi other tickers on. Me, I have So this is the SPY right here, VIX, the dollar, and then the bonds. And I usually, ever since Brandon is like, man, how is Brandon more consistent? Because he's actually seeing the big picture. At first, I was against having more than two monitors, but I actually see the benefit. But take that with a grain of salt because also having too much monitors can overwhelm you, especially if you're a beginner. If you're a beginner, I wouldn't recommend more than four monitors. Um,
Hey, Semper,
what's up?
you said you have three monitors. Do you have TOS on three monitors? And if you do you have to detach your windows to make that happen?
Yes. So I have four monitors.
Yeah.
I have this one, which is a main. So I have one big picture so I can see the overall trend. See if it's, into the from the previous day and see what I can, because if I have it zoomed in like I do
Yeah.
on this one, I tend to get tunnel vision,
Well, I
like this.
the reason why I'm asking is, I have two monitors that run TOS, so I had
Hmm.
detached it, but I actually had three detached windows because the way I want it set up.
Yeah.
And I also had Cat Stacker running, and I noticed that my TOS was about 15-second lag. I was watching Brandon's through Zoom, his moving first, and he'd even say, "Oh, it hit that moving average." I'd look over at mine,
Yeah.
it would go to like 10 seconds before mine clicks. So I'm like, "Oh, I got a huge problem." So I had to go through and get rid of one of my instances and really downs. I had to take Cat Stacker off. Now my PC is a pile of crap,
Yeah.
so that plays a role. But I know that multiple detached windows certainly I think it makes a huge difference. So I was wondering how many you had, and do you have a pretty good PC that runs that, or is it?
I have 64 gigabits of RAM.
Yeah,
So that might help. I think 32 gigs is pretty decent because I'll dedicate 16 gigs of RAM just to my TOS. Uh, and that's on my laptop. I have a like a desktop server,
yeah,
and that one has 128 gigabytes of RAM, and that one I have no issues running
no
anything.
issues. So yeah, I think I need more RAM on my PC, but
Yeah, definitely RAM, and I think the max that you should configure your TOS to is 16. Like between 12 gigs and 16.
yeah, I upped that. I forget what I upped it to. I couldn't go that high because I didn't have RAM to do it, or I didn't want it would take over so much of my RAM of the
Yeah.
PC and nothing else would work.
Yeah, you wouldn't be able to run Ninja Trader if you.
Well, I run Ninja off of a laptop, off a different PC,
Oh,
but
okay, okay.
that
Yeah,
doesn't
you should be good with around 32, and you can run NT because I run two NT charts, and then this is a detached with four screens, and then I have the main one,
all
this
right.
one that's running the cat stacker.
All right. Yeah. So I need to play around with mine. I had to take off I left VIX on, but the dollar and TNX I had to take off. I just have to use Brandon's right now because it would just kill it. I
Yeah,
was watching it. It was such a lag that,
yeah.
because you,
But Nick, definitely pay attention to those because sometimes like as you've heard Brandon say, it's like the VIX will respond, but SPY is lagging, or vice versa. Uh, and if you don't have the screen real estate for having all these charts up, definitely have the zoom either on your phone. It makes it a little bit harder because it's on your phone and it's so small. But obviously, you can still hear Brandon because he's Brandon is great at narrating the levels that he's looking at. So at least that gives you levels to either mark off. And that's usually what I'll do is Brandon will say like my over under is 41-31 or something like that. I'll mark that level off and I'll pay attention to it because it might come into play later. Uh, so yeah, definitely incorporate VIX. The TNX and the dollar might, if you're brand new, it might confuse you because it's the opposite. Just like VIX, it's the opposite of the market. Same with the dollar. If the dollar goes up, the market goes down, or it should at least, because if the market goes up, that means the dollar is strong and things are more expensive to buy. So the market has to go down. If the dollar goes down, it's a lot cheaper to buy. So market goes up and a lot of FOMOers jump in and start, buying up the market. But one of the big things of psychology is what's going on today on the market. And this is what I usually try to decipher, especially going into tomorrow, into a speak or into a speech, is what is a market? Remember, we have to have a trader's mindset. So if they're running it down right now, what do you guys think is going to happen tomorrow? There's two scenarios that I'm seeing or that I'm likely predicting. Either they're going to run it down today. They're going to run it down today for what? For Powell can push it up tomorrow. That's one scenario, right? What I'm thinking is if they do flush it today, if they flush it today, they're going to flush it down. We'll be more better to predict after market closes, just because we'll have the daily candle up to see what it looks like. And the cat stacker does slow down my TOS a little bit, you can see. So right now it's holding this doji level right here. And last week we said that doji level was going to be a strong pivot point right there. It looks like we might just get pinned up, even though it looks down. Oh, there is a gap. That's weird. Why is it red? You guys see that little red? Huh. I've never seen that before.
Is that the dot that comes in with the gap? That's automatic. Yeah, it's actually two dots there to show the gap. That's part of 7 of Mine's code.
Oh, okay. I never seen that. I never seen the dots. I seen the gap, but but you notice right here is holding this doji. So tomorrow, if it's a gap, I'm seeing this. I'll probably think it's gonna go to ACR of this. Oops. And when we say, for those of you that are new, when we say HCR is half candle retrace, and half candle retrace is the fib of the body. So we'll usually fib the body of it. Come on, sucker. Oops. You know, I'm gonna change it just because it's going down. And the reason why I'm changing it is because it's a red candle and it looks like trend might be going down. Dang it. From the bottom up. So it's at the 161 right now. Oops. But yeah, just to get back into the psychology, if they run it down today, they're going to push it up tomorrow. That being said, they might manipulate it tonight. If they run it, flush it down today, if it loses this 161, if it loses this 161, where can it go to? Well, today it bounced the weekly standard dev. So see this level, it's this orange dotted line, it's a weekly standard dev. It's a pretty strong level just because it's a weekly. And look at it bounce, perfect bounce point. to the penny right here. And you even got the cat stacker buy signal right here. If you got a bot right there and you got out over here in the oversold or overcool or overheat, over hot, you could have locked in at least close to 20, 30 points. Um, 5 minutes. And Chico, sometimes it's better to fib out the 5 minute. I've been fibbing out the 5 minute a lot more than I have previously, just because it's a lot clearer to see on the 5 minute. So you might want to do that as well. You might want to do the 5 minute instead of the 1 minute. So you'll fib out the 5 minute and then go into the 1 minute to see if you see a earlier entry.
Would it be the 5 minute from the what you said from the top to the bottom
Yeah.
of the long? Okay.
Yeah, like see right here, like say for instance, this was like this, right? It was like you see a higher low. You see that first higher low. Now you can fib that out just so you can see like, okay, I want to see another higher low off the 50, right? But as price action moves forward, I'll adjust it. So I'll click on the fib and then I'll see a better in like this red candle right here. So I'll see that and then I'll adjust it to that.
Okay.
And you can do that and mess around with it because that one has a little bit more definitive and it has more interaction over here. And look, you could have, if you flipped it out on that red candle, you waited for your pullback to the buy zone right here and you could have got in.
I see. Okay.
So hopefully that clarifies your fib question.
Yes.
But
Thank you.
You're welcome. You can always just play around. It takes practice and it's just to what your preference is. If your preference is a first pullback, obviously the more spread apart they are, the bigger the target's going to be, you know. So if I fib this, it's probably like 2 points in between the lines. But if I stretch it out more, then it's going to be like 3 or 4 points between the line. But yeah, definitely use fibs if you're having trouble with entries, stop losses, or targets. I call them training wheels just because it kind of help you identify those points and help you identify price action a little better. Yeah, so like if they dump it during power hour today, they're gonna run it up. They're gonna run it up after hours. That's the way they like to manipulate. If they run it up after hours, then tomorrow might be a little choppy day until POW comes on. That's usually what they'll do is, like I said, two scenarios. They'll dump it the day before to push it up pre-market for POW. But when POW comes out, they'll dump it. And then for power hour, they'll push it up again. So depending on what they're doing right before POW, they do the opposite. Remember, if they're pushing it down right before POW, that means that it might pop. That POW might say something good. So you have to be alert on what he's saying because sometimes the news will tell you, like if you go look at news articles today, they're going to say, well, it's baked in or a pause, a skip, or a continuation of hikes. Look for those type of words. What is the news telling you? Remember, Brandon always says, sell the news, buy the rumor. Because the news is always trying to manipulate you. If the news is trying to instill fear, if they're saying like, oh, it's going to be the worst recession ever, stuff like that, they're trying to scare you. The smart money's getting in because all the dumb money's getting out and they're going to push it up. But if they're like, oh, it's gonna be a soft landing, Powell's gonna save the market, like kind of reassuring you, then they're gonna pull it down. You got to think inverse of what the news is telling you. Remember, inverse of what the news is telling you. You got to think differently. Right now, VIX is in between standard def center and standard -1. So it still has a little bit room down. So I'm guessing once it hits standard dev -1, they're gonna pop it, or they're gonna dump it. They're gonna dump SPY. But we'll see. It looks like it's setting up nicely for a push up for power hour. But we'll see what the market decides to do. Because it's right at the 666. So right now, what I think it's trying to do is come down to the 200 SMA, tag it to when I say tag it, it's like it's grabbing the 200 to pull it up. Because it has to do two things. It has to push the 666 down, and it has to pull up the 200 for them to cross. If the 200 crosses the 666, it might not, because it's so close to the power hour. I want it. What I want to see, I want it to come down to the 200 because it hasn't tagged it after it smashed through it right here. I want it to come down and tag the 200, grab it, and pull it up. We'll see if that happens in the next hour or so. Comes back to the 200, and then they're gonna pop it up for like the last 10-15 minutes of the market, regular SPY market open. They'll run it up here, and then they'll chop it for a little bit, go sideways, and then wait for 3 p.m. Pacific Standard Time to see what they're gonna see if they're gonna manipulate it up or down. But that's what I think. Just keep an eye on it. We'll see what Brandon says later today. The moving averages are my bread and butter. That's like one of my plays that I like to play. So if you guys have any questions on moving averages, I have a lot of them. But as you can notice right here, like the 200 EMA crossing the 200 SMA, as soon as the bread and butter of my moving average play is the faster moving average crossing the slower moving averages. And there's actually 4 crosses that I pay attention to. The 50-50 cross, which is right here, the 50 EMA crossing the 50 SMA. That's the first cross. Second cross is the 50 SMA crossing the 100 EMA. That's called the golden cross. If it goes up, if the 50 SMA crosses the 100 EMA going up, obviously that's bullish. If it's crossing it on the way down, then it's bearish. And then I have the 200 crossing the 200 EMA crossing the 200. Like I said, the faster moving average crossing the slower moving average. Slower meaning the simple, EMA being faster. And then the 200 crossing the 666. Those are the 4 crosses that I pay attention to. And they're usually pretty solid, especially when you combine them with a fib or a weekly level, daily level, any of those levels that you have marked off, doji levels. In futures, doji levels are really, really strong. So yeah, any other questions? So this was the makeup for last week. We've missed 2 weeks, so we'll jump on again later this week on Friday. If you guys want to come and join us, feel free. If you guys have any questions, most of the time we'll jump on early and chit chat, whatever you guys having issues with, any questions that you guys have, any tips or tricks, or if you want to share your strategy, you're more than welcome. Because the way that I think is a trading room shouldn't be forcing you to trade their style. You should be looking for your own style, whatever fits your characteristics of trading. If you like it to trade slow, then find a strategy that it's a little bit more slow and more consistent. If you like to be aggressive, then go look for a strategy that's aggressive. And I've taken a lot of trading styles from Connor, from Brandon, from Dave, from previous chat rooms, and I've kind of created my own. But that's what you want to do. You don't want to try to fit your style, because then you have to relearn everything. So you want to, like Shiko, she's asking about fibs. What I would do is, okay, let me see how Semper explains it. Let me see how Susan and Brandon explains it. And then let me go to YouTube, because you're going to resonate with somebody and everybody explains it differently. And what you want to be able to do is get those light bulb moments. You want the light bulb moments to go off and be like, oh, okay, that's how you use it. So Shiko, I might not be using them how they're supposed to be used, but they work for me. And find a way that works for you, and they'll work. It's not a matter of if, but a matter of when those targets will hit. Just because fibs do all the calculation for you. So cool. So we'll come back and see what see how LasagnaCat's doing. Next month in July, we're gonna do the small count challenge. So anybody who wants to join, feel free. You don't have to post your P&Ls or whatnot. You can just post your trade if you want. If you don't feel comfortable sharing your P&Ls, I know some people don't like to share, and that's understandable. That puts a little bit more pressure. That's one of the reasons why I kind of can't trade live, because I feel like I'm gonna get put a lot under pressure that I'm just gonna take bad trades. I'm not at that point yet, but hopefully soon. So thanks for stopping by. We'll see you guys on Friday. Have a good one. Pay attention to the market, see what it does tonight, because tomorrow is going to be fun, especially if it plays out how we talked about. You guys have a good one.
Thank you.
You're welcome.